But with this, let's move on and let's connect with Manoj Bhatt, who is the MD and CEO of Mahindra Holidays and Resorts, joining us on the show right now. Hi Manoj, good to be speaking with you. Thank you so much for your time. Before we come to your earnings and the outlook ahead, Manoj, help us understand that how do you see this big bazooka coming in from the union government itself on more incomes in the hands of the people, trying to help them go ahead and spend more. Help us understand that how big a boost this could be for the tourism sector.
So first of all, thank you for having me on the show. So on the budget itself, firstly, this move to put almost 1 lakh crores in the hands of the middle income taxpayers, I think that's something which will be very, very positive for many sectors. And of course, we are one of those sectors where a lot of our current boost in demand is fueled by, increasing incomes. So that's something which is going to be very positive. Also, I think more than just the tax break, I think it's those initiatives, the top 50 tourist destinations to be given a special status, with the hotels there being on infrastructure status. I think that's going to go a long way in attracting more investments, creation of the fund with the states which will promote tourist destinations. So there's a lot in it for our sector, and that's something which will spur demand further. I think if you look at the current trend, I think the demand growth is robust. I think we are seeing industry high level occupancies, and this will go a long way in kind of keeping that trend going on for a long period to come.
Mr. Bhatt, thanks for that outlook coming in. Let's talk about your earnings, how quarter 3 has been for you. And quarter 3 has seen a rise across all operational metrics. Your net profit has gone up roughly 8 times on a year-on-year basis. What has led to this sharp spike, and are the margins that you've clocked in this time of 25%, is that also sustainable going ahead?
So if you look at our overall profits, I think they have done really well at a consolidated level, and that's a combination of two things. So first is the Indian operations, and let me talk about that a bit. So if you look at our Indian operations, as I said, demand continues to be strong. We had an operational utilization of 84.2%, which is slightly higher than the same quarter last year, but it's on an increased room count. So I think we're seeing a very strong volume growth in terms of our members' holiday. Secondly, from that perspective, I think we are seeing also uptick in our resort revenues. I think our resort revenues grew 12%, which is again a sign of people actually spending more in terms of experiences, in terms of various things they would participate in our resorts. So that's the second big theme. The third one is the additional element here is how do we ready ourselves for the demand. So it's been a very strong quarter from that perspective, where we have added 206 rooms, and I have said that we'll add another 1,000 rooms by March 26, which is, to put it in perspective, another about 18% to our inventory. So from all perspectives, it's been a strong quarter on the Indian operations side. So that has contributed to the growth. Coming to the European operations, I think we have had some improvement there, and that has also been very positive despite adverse economic conditions. So combination of these operational metrics and some of the focus we have had on optimizing and making sure that we are working through the European slowdown has helped these numbers with those kind of growth rates which you mentioned.
All right, but Manoj, also help us understand that what is the average occupancy growth that you are seeing right now, and what is the outlook for FY25 in terms of your revenue growth as well as margins? This 25% margins and above, is this sustainable level?
So from my perspective, we don't give guidance. So the way I would look at it is from a trend in terms of occupancy, from a trend in terms of some of the kind of consumption trends within our resorts. I think that will remain intact. Overall, I think we do see that if you look at historically, quarter 4 is a strong quarter for our European business, so that should also help from a quarter 4 perspective. We don't share precise numbers of where we will end, but from a more longer term perspective, I think the confidence we have in our demand cycle is reflected in the kind of inventory additions which I spoke about, and our plan to be 10,000 rooms by F30. So overall we are well set in terms of kind of both catering to the demand and also well set in terms of just demand trend continuing in this sector and for us specifically.
Before we let you go, Mr. Bhatt, just give us a quick outlook on what your greenfield and brownfield expansion plans are looking like right now.
So right now, as I said, for the next almost 5 quarters or 4.5 now, I think we are planning to add about 1,000 rooms, and out of which there will be 2 greenfield completions, and the remaining will be combination of brownfield, which is existing resorts, as well as new resorts. We'll add 15 new destinations. Over a longer period of time, I think we had said that we will go to 10,000 rooms from our current about 5,700, and then we are well on track in terms of the funnel and how it is tracking. So from both of those, I think we are in a position where we see that reaching those goals is looking very likely and reasonable, and that's what we are working towards.
Right, with this, Manoj, we let you go on that. Thank you so much for taking the time out and speaking with us on the earnings and also giving us the outlook on the tourism industry as a whole. Pleasure speaking with you.
Thank you so much.
But with this, viewers, let's move on to another company then. And